Moments away from the closing bell. What'd you miss? Stocks falling as markets reopen after the U.S. holiday. Financials and healthcare companies leading the drop. The U.S. dollar heading for its biggest one-day loss since July. I'm Scarlet Foe.
And I'm Joe Weisenthal. If you're tuning in live on Twitter, we want to welcome you to our closing bell coverage, which is every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. U.S. stocks starting the week off with declines as Donald Trump tweets, this time about the U.S. dollar being a little bit weaker than he had wanted it to see.
A little stronger than he'd like it.
I'm thinking of China, rather.
Meanwhile, still a ways to go from Dow 20,000. We don't even talk about that anymore.
I know, because we just keep moving farther and farther away. If you look at the breakdown of sectors, you have a lot of more defensive names leading the gains. You have consumer staples, utilities, REITs, all performing well. You could see utilities and consumer staples gaining better than 1%. The financials, the big losers here, even as Morgan Stanley came out with earnings that were decent. And of course, you had the other big banks reporting results that also came in better than expected as well. Financials off by 2.4%. Of course, they were the big losers, the big gainers. I'm getting all my terms mixed up today. They were the big gainers after the election. One thing I noticed was the Chinese stocks and how they performed overnight. They finished higher after earlier falling as much as 0.8%. Xi Jinping, the president of China, in Davos for the first time, he was advocating for globalization and warning against trade wars.
The new liberal hero, the head of the Communist Party, Xi Jinping.
Well said, exactly. Michael Block of Rhino Trading Partners suspects that the government was buying, or at least directing some buying to support share prices before Xi's big speech on the big stage.
Let's take a look at bonds starting in the U.S. with the U.S. 2-year and 10-year. Notable moves lower today, so sort of consistent with this classical risk-off behavior. Down 10-year yield down to 2.32 is kind of where it was at its lows last week. If we look at a one-month chart of the 10-year yield, you can really see how far we've come, sort of erasing a lot of those gains. We were in the mid-twos, 2.56, not very long ago. Everyone said this is going to be the year of higher rates. There's obviously a very long time to go still this year, but for now, the move has been lower.
All right. And, of course, the big story in the markets today was the dollar, which is heading down, 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 the biggest single-day loss since July for the Bloomberg Dollar Index. And Joe had pointed this out earlier. Come inside the Bloomberg here. This is WCRS Go. And the dollar is actually one of the worst-performing currencies so far this year. If you use the yen as your base case, just as a base case for the year to date, what's interesting here is the dollar is right down here, off 3.7% versus the yen. The Mexican peso is off 7.3%. That's its own story, of course. But the British pound is off 3.2%. It's noticeable here just how much the dollar has fallen off.
Right. The pound had been weaker this morning, but with the big surge, now it's only the peso having done worse.
And, of course, we got to look at pound overall. There's the pound versus the G10 currencies, stronger against all the G10 currencies. A bunch of different reasons, of course. Bounce back from steep losses the previous day when it dipped below $1.20. Theresa May is also putting everything Brexit related to a parliamentary vote, which some people say means things will take a while to unfold. It's not going to be done right away. So that's good for the pound. Also, UK data, for the most part, is getting better and better. The IMF raised its 2017 forecast for the UK for this year.
And finally, a quick look at commodities. Not the busiest day, but green across the board. NYMEX oil up marginally. And a really solid day for the precious metals. Gold up 1.6%. Silver up 2.6%. You know, the precious metals obviously got really hammered after that Trump election. But it's part and parcel with all the reversals we're seeing today. The rally in treasuries, the weakness in stocks, and, of course, the strength here in the metals.
Those are today's market minutes. Joining us now for more on the markets is Terry Simpson. He is a multi-asset investment strategist at BlackRock Investment Institute. And, Terry, I know that we want to look at high yield when it comes to measuring risk in the markets, but I want to get your take first on how things are moving in lockstep once again. It's been a while since we talked about risk on and risk off, and yet here we are today in a very risk-off scenario.
Yeah, it seems that we're coming back into this environment where, as you said, it kind of is like the risk on, risk off. I'd say what it is, it's about a pause in the markets, and the market's trying to get really some direction for where we're going with this fiscal policy and then how that's going to tie into monetary policy. And hopefully, as we get more clarity, as you know, President-elect Trump is inaugurated on Friday and then going the first 101 days, we'll see what that policy looks like going forward.
Well, the big story domestically today, the sell-off in the dollar after Donald Trump expressing his view that the dollar is currently too high. A key driver, as you point out, is, of course, yield spreads, and ultimately, to some extent, or yield differentials between U.S. Rates and our foreign counterparts. How much can he sort of jawbone the dollar around, push it, and how much is it just sort of axiomatically going to be driven by those yield differentials?
Yeah, so it's interesting. It seems today's kind of been all about the rhetoric and what he's been talking about, but the reality is that we are still moving into an environment where U.S. economic growth is at a completely different cycle versus its European peers, also Japanese peers. So reality is if we have this large fiscal stimulus that's actually delivered and implemented, even though it might be much more of a 2018 story than a 2017 story, that still leads to a stronger dollar. And so there'll be pullbacks, and we're going to see this. Markets never trade strongly or in one straight line.
Right.
But as this kind of materializes, the fiscal policy will get more direction, and we'll see stronger dollar. But I would say, even as we wrote about in our weekly commentary, is that we're expecting this rise to be a little bit more modestly going forward, not to the level that we've seen already.
Oh, it certainly started off on a modest note in 2017.
Yeah.
Another chart you brought to us is here on my Bloomberg. This is G#BTV664, and it shows how high-yield bonds are paying the smallest premium to investment-grade debt in more than 2 years. You can see that big spread there. What does this say about risk appetite in the market right now? Yeah,
so it's interesting. One of the questions we've been getting a lot from clients is, what do we do with oil at these levels? We've kind of gotten the OPEC agreement now. How do we express that trades? Well, one of the things when we look at energy credit has basically been a really good opportunity over the last couple of years, but energy credit spreads have tightened significantly versus other sectors within high yield, particularly cyclicals and defensives. So what we are recommending to our clients right now is to be neutral in energy credit, and because there's just really not enough spread being offering a compensation for investors. So we're recommending to be neutral and kind of wait to see if there's any more pullback in the energy credit sector to get back in.
What about non-energy portions of the high yield market?
Yeah, so I think generally we still like credit, but I think one of the things we're trying to do in our multi-asset portfolio is take down the beta risk of our portfolio. So what we've done is we see the really strong performance in high yield going back in 2016 versus investment-grade credit. So we're preferring right now investment-grade credit relative to high yield debt right now.
So that just means you're not exposed to certain sectors completely then?
Correct, yeah.
So retail, for instance, is not a part of what you're looking at?
I think definitely we want to be focusing more on cyclicals at this point. So we understand, I think we echo kind of what the IMF has talked about. We expect higher global growth going forward in 2017, and that should lead to, I think, cyclical-oriented sectors outperforming, not only in equities, but I think also in the fixed income space.
And there you see your chart. I mean, you look at the massive surge in high yield spreads last year. Of course, that was when it looked like the economy seemed to be falling apart. Oil was completely crashing. What do you have, in general, going back to oil for a second, how important is oil itself significant to your view?
I think it's important because oil is a significant macroeconomic variable. So when we think about expectations for global growth leading higher, typically that means you're going to see some demand. And if global growth is moving higher, then that means businesses are investing, people are basically transporting themselves across not only goods and services across the globe. So we always use oil as kind of that basic fundamental macroeconomic variable. That's why we're paying so much attention to it right now and seeing what the direction is for it.
All right, so President-elect Donald Trump, he's going to become the president Friday at noon. What's the key thing you're going to be watching for in terms of how he sets his priorities?
Yeah, so I think we have to really see what the trade policy is going to be, and then obviously what the tax reform is going to look like. So we may not get a lot from the speech on Friday, but I think, as I said earlier, the first 100 days, we're going to see what this kind of tax reform looks like, and then also what the trade policy looks like. And that's going to have tremendous implications on specific sectors, specific industries, notably the oil industries, and how we actually recommend specific ideas there in equities or in fixed income.
What's the risk that we generally don't get anything specific? I mean, he's very good and very vocal on big picture policy, but he kind of leaves the details to those he delegates to, and perhaps they might not be as transparent with what they plan to do.
Yeah, so it's interesting. I think there's a tremendous divide still as we look within the Republican Party. And a lot of people said as soon as Republicans gained control of all houses of the government that it was going to be automatic fiscal policy launch. But what we're seeing is now there's our quote-unquote deficit hawks out there that do not want to continue to balloon the balance sheet up, that they want to kind of have this tax reform, or at least corporate tax reform, be somewhat revenue neutral. So it'll be interesting to see how those developments actually play out and how, I would say, the more hawkish members of the Republican Party work with the more conservative members who want the fiscal stimulus to be delivered.
So much tension. Terry Simpson, multi-asset investment strategist at the BlackRock Investment Institute. Thank you very much.
Great. Thank you, guys.
It's been a busy day, but the question is, what'd you miss? UK Prime Minister Theresa May outlined her plan for extracting Britain from the European Union. Is her blueprint feasible? Plus, we're at the World Economic Forum in Davos, where Deutsche Bank CEO John Krein and Credit Suisse CEO Tidjane Thiam tell us what they think banking will look like in the next 5 years. From New York, this is Bloomberg.
I'm Elisa Parenti. Let's get to First Word News this afternoon. The man suspected of fatally shooting 5 people and wounding 6 others at a Florida airport returned to federal court today. The hearing in Fort Lauderdale was over whether 26-year-old Esteban Santiago could be released on bail. Prosecutors say they want him to remain in custody. Santiago is accused of a shooting rampage at a Fort Lauderdale Hollywood International Airport baggage claim area. He could get the death penalty if convicted. President-elect Donald Trump's transition has the approval of 40% of the American people. That is according to an ABC Washington Post national poll. Trump's number is well below those of his predecessors, including President Obama's 80% and George W. Bush's 72%. Former Presidents Bill Clinton and George H.W. Bush both had transition approval ratings above 80%. Senator Elizabeth Warren is not sold on Congressman Tim Price's ability to fulfill responsibilities as the Health and Human Services Secretary. That is according to a 20-page letter the Massachusetts Democrat has sent the nominee. Among her grievances, Price's effort to repeal the Affordable Care Act and his active trading in health-related stocks while pursuing related legislation. Price's confirmation hearing is tomorrow. And President Obama made a surprise visit to today's daily press briefing to pay tribute to White House Press Secretary Josh Earnest. It was Earnest's final briefing. Mr. Obama touted his intelligence, integrity, and, quote, actual interest in the issues. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Scarlet?
Thank you so much, Elisa. We want to bring you some earnings. It is earnings season after all. CSX, the railroad company, reporting profit that missed analyst estimates, 49 cents a share for the fourth quarter, missing the consensus by a penny. Revenue, however, slightly higher than expected, just over $3 billion when analysts were looking for $2.99 billion. Cargo has increased, and this was the first quarterly profit increase since 2015. So even though profit missed, it was a profit increase. You're looking there at CSX shares down 2.5%. And a quick mention also of Adobe. Adobe didn't report earnings, but did say that it is going to buy back $2.5 billion of equity by the end of fiscal year 2019. So Adobe adding to its share buyback program, $2.5 billion of stock by 2019.
What you missed, Theresa May's plans for a Brexit. In a speech today, the UK Prime Minister vowed to seek a smooth and orderly Brexit, but she remains committed to honouring the will of the voters.
I want to be clear. What I am proposing cannot mean membership of the single market. European leaders have said many times that membership means accepting the four freedoms of goods, capital, services and people. And being out of the EU, but a member of the single market, would mean complying with the EU's rules and regulations that implement those freedoms without having a vote on what those rules and regulations are.
The pound also rallied today. Theresa May said that Parliament will get a vote on the final deal. Joining us now is Megan Green, chief economist for Manulife Asset Management. Megan, welcome back to the show. So what's your big takeaway from Theresa May's hotly anticipated speech?
So this is the clearest that Theresa May has ever been, but I don't think she actually offered us anything surprising or that we didn't really know already. Right. I think that the markets and investors I've spoken to have been really disappointed by this, but I think that they were really going with hope over experience or logic. I mean, there was no way that the UK could stay in the single market and limit the movement of people.
Right. It seems pretty definitional, and she even said it herself. She says she wants a deal, she wants free trade, but the EU defines the single market as including free flow of labor. She's against that, so by definition, they have to exit the single market and find something new. It didn't sound like there was any, the way she portrayed it is just like this is how it has to be.
That's right. I think it makes total sense and is unsurprising. What was surprising was the conciliatory tone that she adopted towards her European counterparts with whom she'll be negotiating. So she highlighted a few things like defense, where the UK will still need to be active, and that was sort of not a shot across the bow, but it may be a negotiating tool that she'll bring out later. She also mentioned that Parliament will end up voting on the final deal, which we knew would have to happen at some point, but we still don't know really what happens if Parliament votes against it. In theory, then the UK just tumbles out of all trade agreements. The UK isn't even a member of the WTO, which most people don't realize. It's a member only as a member of the EU, so it would have to renegotiate everything.
Well, it looks like it'll be a choice between hard Brexit and harder Brexit at the very end.
That's a really good way of putting it. And it sounds familiar, that idea of investors going with hope over what someone else has said. In any case, one thing that investors and traders have been very frustrated by is Theresa May's lack of details. She didn't want to disclose too much about what she was going to say regarding her Brexit strategy because she didn't want to tip off her partners in negotiating, right? She didn't want to give them any kind of advantage. Do we presume that we're getting the full story here? I mean, there's still quite a bit that she's withholding, that she's not telling everyone, isn't there?
There are a lot of details that will still need to come out, but the idea that, the rest of the EU doesn't really know what the UK's hand is in these negotiations, I think is probably wrong. We all know that the UK would like to stay in the single market, but would like to control the movement of people. That can't happen, so now they've agreed that they'll have to leave the single market. They would like to maintain part of the customs union, but they're not sure how they'll be able to do that. So all those details will come out, but we know roughly on each individual issue where the UK stands. It's a bigger question, I think, where the rest of the EU is.
One of the points she made is she discouraged the EU from taking a stance, a desire to punish the UK. And she said that that would only hurt the rest of Europe because there is a lot of, cross-border manufacturing flows and value chains, and ultimately would hurt a lot of European companies if they decided to try to hurt the UK in the agreement. Is she right about that, that ultimately if they tried to hurt the UK, they'd be hurting a lot of their own companies?
So she is right to a certain degree. There is some truth in that, and ultimately trade wars hurt everyone, ultimately, as we've heard from Davos recently. But I think also what European leaders are going to have to weigh that up against is how they're going to fare in upcoming elections relative to anti-European factions in their own countries. So their considerations, I think, will be primarily domestic. They won't really be thinking about the trade aspect of it.
Megan, one thing you're looking at here in the U.S. is a border tax adjustment. President-elect Donald Trump, of course, tweeted. No, actually, he didn't tweet. He said this to the Wall Street Journal today, over the weekend, in fact. And he said, anytime I hear border adjustment, I don't love it, because usually it means we're going to get adjusted into a bad deal. That's what happens. So when you did analysis on border tax adjustment, this is actually something that was part of Paul Ryan's proposal, isn't it?
Yep, that's right. And it's actually supported by a lot of Republicans who aren't traditional protectionists, actually. They're more moderate Republicans. But ultimately, I mean, Trump also said it was too complicated, this deal. And it's actually not that complicated, but it's a bad deal. I think whether it happens according to the theory or not, and there's a lot of questions around that, it will probably push the U.S. into stagflation and could well push the rest of the world into debt deflation. And those two things together for an economist are absolutely terrifying.
From a protectionist standpoint, is there anything to merit for it? I mean, we're going, Trump obviously would like to move our policy in some way that more favors domestic companies, even if theoretically that doesn't end up helping them. Is a border tax adjustment one approach to doing that, or is it just bad all around? So
one thing it does is it removes the current incentives we have in our tax structure for companies to move their profits and production abroad. So more companies might be incentivized to stay in the U.S., and so Trump can argue that he's saved U.S. jobs by keeping companies here. But ultimately, I think in the past we've seen that current account adjustments affect the currency after 5 years on average. So it's going to take a long time for the U.S. dollar to adjust, which is what people are hoping for. And so it'll be a big tax on the U.S. consumer.
All right, Megan Green of Manulife Asset Management, you'll be staying with us after the break.
We have some earnings from United Continental. United Airlines fourth quarter adjusted earnings per share $1.78, beating the consensus estimate by 3 pennies. Operating revenue was $9.05 billion, which also matches the consensus estimate. You're looking there at headlines saying the fourth quarter PRASM was down 1.6% when the company had anticipated a drop of 1.25% to 1.75%, so well within the range that it had defined. Nevertheless, UAL shares falling 1.4% in after-hours trading. This is Bloomberg. Bulletproof. We're back with Megan Green, Chief Economist at Manulife Asset Management, and we want to take a deep dive now into the Bloomberg. You can find the charts using the function at the bottom of the screen. And I'm looking at the debate over whether the bull market in bonds is poised to end or not. It's vigorous, but you wouldn't know it by looking at the consensus Wall Street forecast. So this is BYFC on the Bloomberg bond yield forecast. Now you click on the 10-year line, as I've done here, and you go into it. You can look at the histogram of what economists are forecasting. In 22, or actually now it's 33 of the 62 strategists and economists that we surveyed expect the 10-year yield to rise to a range of 2.42 to 2.58%. Oh, you know what? Here, we want to go to fourth quarter of 2017. There you go. 22 expected to end anywhere between 2.53 and 2.79% by year end. That's at the high end of that range, 2.79%. That's equivalent to about a third of a percentage point from where it ended at the end of 2016. So it seems like a fairly tepid forecast with all this vigorous debate.
Yeah, it's really not that much. We talk about how everyone's like, oh, is this the bond bull market turning? But everyone's sort of clustered in this fairly safe range here, aren't they?
Yeah, and I think that's been the case actually for a really long time. So ever since the election, we have seen much more bullishness in fixed income, but it seems like it's being tempered, and in any case, it's everyone who's turned a bit bullish. So there are consensus trades that are continuing.
The bigger question is how you get to that forecast by the end of the year. It could be up, it could be down. I wonder if a trade war with China, if that does happen, will show up as a higher 10-year yield.
Yeah, I think it quite possibly would, because it would most likely result in higher inflation for the U.S., and so that could push up where investors expect the 10-year.
Speaking of higher inflation, today we got the U.S. Empire State Manufacturing Index, just one of the regional manufacturing surveys. The headline was kind of but I looked at the prices data, and so they asked manufacturers in New York, how much are you paying more for your goods? Are you receiving more? And you can see both of the lines have really shot up. Both are at their highest level in about 3 years. So you see, companies saying, yeah, we're seeing pricing pressure. We're seeing the ability to raise price, so pass them along. I mean, is this the real deal inflation-wise? I mean, I kind of think that is the big question for the U.S. economy. Is this a real turn? We've hit a few blips. There was, of course, 2011, and the Fed
yeah, you could see it right there in the chart.
Transitory, but is this the real thing here?
I don't buy it. I don't think this is the real deal. I do think inflation's going to look fabulous for this month and next month, and that's largely a result of oil prices. So it's the year-on-year base effect falling out of the comparison that we'll need to worry about from March onwards. And so inflation will look better for statistical reasons, but not for structural reasons at all. In order to see inflation look a lot better and growth look a lot better, I think what we need to see is a boost in long-term productivity in the U.S. And there's a chance we could get that with some kind of infrastructure projects that deal with education and roads, things like that. But unfortunately, I don't think companies are going to be interested in those projects because they're not very profitable. So I think it's unlikely.
All right. Megan Green, Manulife Asset Management Chief Economist, thank you very much for joining us. And a quick programming note. Tomorrow, Federal Reserve Chair Janet Yellen will speak to the Commonwealth Club in San Francisco on the economy. We'll have live coverage for you starting at 3 p.m. Eastern. This is Bloomberg.
I'm Elisa Parenti. Let's get to First Word News this afternoon. President Obama has commuted most of the remaining sentence of Chelsea Manning. That is the Army intelligence analyst convicted of the 2010 leak that revealed American military and diplomatic activities around the world and put WikiLeaks on the map. Manning has been jailed for nearly 7 years, and her 35-year sentence is the longest punishment ever imposed in the United States for a leak conviction. She will be released in May. And President Obama met with his national security team to discuss preparations for President-elect Donald Trump's inauguration. That is according to White House Press Secretary Josh Earnest, who said the president directed them to maintain a high state of vigilance during the ceremony on Friday. And you can watch President-elect Trump sworn in as America's 45th president right here on Bloomberg. Our special coverage starts at 10 a.m. Eastern, 3 p.m. in London, and 11 p.m. Hong Kong time. Boeing CEO Dennis Muilenburg meeting today with President-elect Trump for the second time since the November election. On the agenda, Boeing's contract to build the next generation version of Air Force One, as well as its F-18 Super Hornet.
I think Mr. Trump is doing a great job of engaging with business. Together, we're working through simplifying the requirements and streamlining the process and applying commercial best practices. That's going to lead to substantial cost reduction. So this is something that we're working together, and I appreciate the teamwork approach on this. I think it's the right way to do business.
Trump has put very public pressure on Boeing and other companies to reduce costs. And online companies like Amazon.com are vulnerable to unfair competition from Internet service providers if the FCC's open Internet rule is reversed. That is according to agency chair Tom Wheeler, who says, quote, nobody is safe. Wheeler, a Democrat, says the GOP won't find it easy to reverse the open Internet rule, also known as net neutrality. It forbids ISPs like Comcast and AT&T from blocking or slowing competitors' web traffic. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Joe?
Now let's get a recap of today's market action. Kind of a classically risk-off day today. You see there the Dow Industrials losing 0.3%. The big loser, the NASDAQ, which had been on a real gaining streak, up down 0.6%. The dollar had its weakest day since July 29th. And the pound had its strongest day since 2008 after Theresa May's sort of goals, outlining her goals with the Brexit.
And, of course, a lot of that had leaked already, and it took the pound down to below 120
Exactly.
yesterday.
A lot of it just reversal.
A little bit of a dead cat pounds there. A big one, but still, nonetheless. All right, well, before Deutsche Bank announced its $7.2 billion settlement with the U.S. Department of Justice, Bloomberg's Tom Keene spoke at the World Economic Forum in Davos with Deutsche Bank CEO John Cryan. Now, as part of a panel, Tom asked John Cryan what he expects the banking sector to look like in 5 years.
Well, we are placing our bets on technology. We're not sure that the fundamental nature of products will change much, although regulation tends to impact that. We don't think that the demands of our clients and counterparts will change too much. So it's the delivery mechanism. And that will help us protect ourselves. We can use technology to improve our own controls. We can use technology to improve our efficiency. And then we can use technology to improve the customer service.
What is the to-do list for a major bank? How do you pull in that technological innovation? I had a panel here 2-3 years ago on the same theme, ever more so now. How do you pull in that institution, that innovation to slower, stodgy, developed economy, banking and finance?
Well, we've taken a number of approaches. One is to work with it, but it's a slight distance, so that we are a multinational corporation. That's not an institution at which all young people aspire to work these days. So we find newer ways of working, particularly with younger people. They want a different employment contract than a simple employer-employee relationship. They're much more fluid, and they want sometimes some equity. So we work with them as a third party, but with some degree of exclusivity. And we can capture the intellectual property without necessarily formally employing the individual. And we've set up we've 3 or 4 different approaches to that. We're not sure we necessarily always have the right idea. It varies from country to country too, because employment law varies. But in Germany, we've 2 or 3 different approaches to how we deal with entrepreneurs and innovators.
Do you just assume a consolidation? We see moment to moment in the future of finance, everyone's working on the expense side of the income statement. That can only go so far. And then do we see consolidation, whether it's in your banking or Anne and Mario's more portfolio-based products?
I do, and I agree with you that there's pressure on expense, but there's also a lot of pressure on improving controls. And the product innovation, when I stress product innovation, there have been plenty of other innovations, and digital currency is one of them. But the products haven't fundamentally changed because they tend to be regulated, and they're more and more regulated. So as regulation becomes more granular, traditional institutions tend to be less innovative, and we're looking elsewhere for disruptors.
If Deutsche Bank's John Cryan is betting on innovation, then Credit Suisse is betting on continued cuts to boost efficiency this year. Also from the World Economic Forum in Davos, Credit Suisse's CEO Tidjane Thiam talked to Bloomberg's Francine Lacqua and illustrated his bank's priorities going forward.
We took a lot of cost out of global markets in 2016. There is another chunk coming out, but it's not that material. And then we are continuing an efficiency program across the bank, really. And we've been quite explicit about that in Switzerland and in other parts of the bank. But fundamentally, what I believe is that we should improve productivity 2 or 3% per annum. I think that's how the bank should be run. Because I don't actually like efficiency programs. No, productivity. I really make a big differentiation between productivity and cost. Because sometimes the most productive solution doesn't necessarily involve a cost cut. But sometimes it can be hiring better people. Right. When you look at things like compliance, we are investing a lot in knowing your customer, in the systems, and ultimately. So initially we are investing, but that will generate huge savings later on because we upgrade the skills of the people. We are hiring. So for instance, when people look at the cost per employee, I always say that's a really bad metric because what you want is the productivity per employee, and sometimes you have to pay people more to get more. So ultimately, I say 2-3% productivity improvement per annum. My preference would be that we never have an efficiency program, because I think if a company is really well managed and is improving its productivity 2-3% per annum, every 3-4 years you gain 10-15%, and you don't need those big cost-cutting programs.
Yeah. So when will that end? 2 years?
I think 2018 we should be basically done with.
So in 12 months or at the end of 2018? At
the end of 2018. But in 2018 you'll see the improvements coming through. We're already seeing it. You'll see more in 2017. And in 18, we know, because we haven't talked about it, but we're also dealing with this big legacy. We took it at 75 billion of our RWA. We're now down to 50 in 1 year. Yep. We're going to continue to take it down. By the end of 17, we will have dealt with the legacy, so not just the RMBS. So then 18 is really the first year where you have a much lower cost base, a lot of efficiency, the legacy issues off the table, and you can really focus on driving the bank forward.
And Tidjane, give me a sense of, so where do you see the main driver for the investment bank this year?
Well, I think the expectation is that fixed income is going to do well. With equities, we have a good franchise. It's doing well. That was masked by a very specific activity, which had very volatile results, and we announced at Q3 that we are externalizing that, and we raised outside capital to put that in a specific vehicle. So I think equities will have a reasonable year. And if you compare to last year, look, this will be impacted by the uncertainty. We saw with Brexit what happened to the ECM pipeline and DCM. So you will have that from quarter to quarter volatility. But certainly the brunt of the year should be around fixed income and strengthening fixed income.
Are you expecting more volatility in 2017 than we had in 2016? Will the markets be a little bit more sophisticated or still quite binary?
That's really, I can only say I don't know. Volatility is famously hard to predict. You can make an argument both ways. And frankly, the reality will depend on what actually happens. But you can easily build an argument that volatility will be lower or higher.
That was Credit Suisse CEO Tidjane Thiam earlier today from the World Economic Forum in Davos.
Coming up, we turn to technology and go inside Netflix, and the numbers don't lie. The company is set to report earnings tomorrow as its cost of content, original programming, specifically skyrockets. This is Bloomberg. I'm Scarlet. What'd you miss? Netflix's original programming strategy has remade the media landscape, but it comes at a huge cost, and there's no certainty it's sustainable, particularly as competition heats up with Amazon. So let's look at Netflix in today's The Numbers Don't Lie. It is all about subscriber numbers. In the third quarter, Netflix added more than 3.5 million streaming customers in total, topping estimates domestically and internationally. Now, the company has 47 million members in the U.S. and 39 million more around the world. International is a key focus here, generating 40% of sales in the third quarter versus just 16% 2 years ago, so a huge difference. You see here how the growth rate, that is the orange line, for international outpaces the more mature U.S. market, which is the white line. Netflix's target is a 50-50 domestic-international revenue split. Original programming is a major factor in its overseas expansion because Netflix owns the global rights to most of that content. Now, of the record 455 scripted originals that were telecast last year, a fifth, that is the yellow slices on these bars, were on streaming services such as Netflix. That's a much bigger piece of the pie compared to just 5 years ago. Of course, this original content comes with a higher price tag than reruns. Even as Netflix's original catalog has been cut in half, its annual content costs have doubled, topping an estimated $5 billion in 2016. Whatever happens with the results, Netflix will definitely be a stock to watch. On average, the stock price has moved more than 15% in either direction after each of its quarterly reports in the last 7 years. You can see the big swings there. We'll see if Netflix can keep that subscriber growth going as the price of content increases. Netflix reports results after Wednesday's U.S. closing bell. Joe?
Thanks, Scarlett. Joining us now to dig even deeper into Netflix is Bloomberg Intelligence senior analyst Paul Sweeney, and in our Los Angeles bureau, Bloomberg's Lucas Shaw. Lucas, you wrote a cover story for this week's issue of Bloomberg Business Week, and you focused on Netflix's international success, especially in Brazil. So this has been a huge issue for Netflix, its ability to expand internationally. How is it going? And in the places where they have seen success, what's been the ticket?
It's going very well in the places that they've been the longest or that are most similar to the U.S. So the biggest markets for Netflix outside of the U.S. are UK, English-speaking, very similar media climate, Canada, right on our border, and then Latin America, with Brazil and Mexico being far and away the two biggest markets, and Brazil significantly bigger than Mexico. Where it's less clear is a lot of the newer markets that they went to early last year. So that's Asia, that's Africa, the Middle East, some of Eastern Europe. The numbers from all those markets, as far as most analysts can tell, are quite small. And I think Netflix is aware of that. I mean, when I spoke with Reed Hastings, the CEO of Netflix, for that story, he acknowledged that it's still a work in progress in a lot of these newer places, which represent about half of the world.
Of course, he has big ambitions as well. In Lucas's story, Paul Sweeney, Reed Hastings says that international will one day be 75 to 80% of the user base. In terms of revenue split, Netflix is looking for 50-50 between international and domestic. Are either of these feasible?
I think they are. I mean, they were really aggressive last year in 2016, really accelerating their international launches and their international exposure. So they are pretty much everywhere around the world, with the notable exception of China. And they're going to go in through some joint venture type arrangements. But they are essentially everywhere, and simply a question of really building up their user base in each respective market. Now, I think what they're finding is in some of the European and Asian markets, it's been a little bit more difficult than some of the earlier English-speaking markets. They've had some entrenched competitors in there, local competitors. Some of the U.S. programming, the English programming, is not traveling as well to some of these non-English-speaking markets. So a little bit slower trajectory on some of these international growth markets in 2016.
And Lucas, in your story, you really dug deep into how Netflix won over Brazilians. And it involved teaming up with existing companies and also building up some of the infrastructure itself. Tell us about that.
Yeah, so when Netflix went to Latin America 5 years ago, internet was not particularly widespread, particularly high-speed broadband. Even today, it's an issue where you have pockets in, say, Sao Paulo and Rio, and outside of the two biggest cities in Brazil that have very good internet, and then others that are not so much. Now, the key to Netflix in every market where it goes is the ability to stream video consistently at a high quality. If you can't do that, you're never going to use the service, which is why Netflix recently enabled offline viewing, so that you can at least download it someplace where there is internet and then go someplace where there's not. That's what offline viewing is all about, the emerging markets. Now in Brazil, what they did was they partnered with some of the local telecom companies. They have this program called Open Connect, where they provide servers so that your streaming video and all the data doesn't have to ping around the world. It can kind of travel more locally and increases the chance that the quality is high. They partnered with local programming providers. They couldn't get a deal in Brazil with Globo, which is the biggest media company in the market, but they did get some stand-up. They got some really popular movies, and then they have just recently released their first original series in Brazil, which is a strategy that they're adopting all over the world. They're going to have originals in almost every big country that they have. And then it's little things like payment and piracy and introducing smart TVs. Netflix has to take a slightly different approach in every country, but it all boils down to things like infrastructure and programming.
Paul, tomorrow when we get Netflix earnings, what are going to be the numbers that, besides the obvious, that you're going to be looking for, and what do you think will be the key things that really drive the stock one way or another? Yeah, I think this still is a momentum story. It's not an earnings momentum story or a revenue momentum story. It's really a subscriber momentum story. So people are looking at the subscriber net adds for the quarter and for the forecasted period. Not so much domestically, because we know that market is a little bit more mature relative to the international markets. I think investors are really focusing on the international subscriber ads, because that will be the source of growth over the next several years, which will support these huge programming liabilities that the company has. All right, Bloomberg's Lucas Shaw and Paul Sweeney, thank you both for joining us.
Coming up next, we'll talk to Saudi Aramco CEO Amin Nasser about how he plans on making one of history's biggest IPO more appealing to investors. From New York, this is Bloomberg. What'd you miss? Saudi Arabia intends to reduce the overall tax rate paid by its national oil company, Saudi Aramco, to make its 2018 IPO, potentially one of the biggest in history, more appealing to investors. Bloomberg's editor-in-chief, John Micklethwaite, sat down with its CEO in Davos to get an update on its IPO trajectory.
Yes, our plan didn't change since we talked last time. It is still the plan is to go list in 2018.
In the second half of 2018 or in the first half?
I would say in the second half of 2018.
And what do you need to do between now and then to make the flotation work? When do you think you're going to announce the further flotation plans?
There will be, first we'll be selecting the banks that will be helping us for the listing in different markets. That hopefully will come sometime soon after we complete selecting the banks, and then that will be followed by selecting which market that we will be listing in. We are looking at different markets for listing. In addition to, of course, listing will happen in Tadawul in Saudi Arabia. We're looking at other markets.
The front markets, you mean sort of Canada, London,
we're looking at,
Hong Kong?
Definitely, absolutely. We're looking at New York, we're looking at Hong Kong, London, the UK, and mentioned Canada. All markets being looked at and assist to decide where the listing will happen, and is it going to be dual listing in terms of only Saudi Arabia in one market, or triple listing. It will all depend on the assessment after the team complete their evaluation.
And you've been surrounded by bankers here. Have you made any progress at all in narrowing that down to merely 50 bankers from 100?
Well, in our business, we see a lot of bankers, not necessarily because of an IPO, but yes, we've been seeing a lot of bankers. Last year when we came to Davos, and a lot of bankers also we've seen this year in Davos, but not necessarily all because related to the IPO. There's a lot of discussions in our business because we are a global company. We have a lot of investment in different markets, and financing for our deals outside Saudi Arabia is also being done by these banks.
That was Saudi Aramco CEO and President Ahmed Nasser with Bloomberg's editor-in-chief John Micklethwaite in Davos.
It's time now for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. BlackRock has reached a settlement with the federal government. It will pay $340,000 to resolve allegations it forced departing employees to waive their rights to obtain whistleblower awards. The SEC says more than 1,000 employees signed such separation agreements when they left the world's largest asset manager. And Mark Zuckerberg is denying claims the virtual reality headset maker acquired by Facebook in 2014 stole the technology for the Oculus Rift goggles. Zuckerberg was called to the witness stand today by ZeniMax Media. The company contends Oculus VR poached one of its star designers and looted its intellectual property. The $2 billion case in Dallas federal court is in its second week. Rolls-Royce has the green light from a UK judge for its settlement proposal with British prosecutors. That approval coming as the US Justice Department unsealed a parallel agreement with the company. Rolls-Royce has agreed to pay $800 million to resolve bribery probes in both the US and UK as well as Brazil. The British agreement covers irregular activity dating as far back as 1989, while the US one covers a period beginning in 2000. And that's the Bloomberg Business Flash.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg. What'd you miss? U.S. stocks finishing the day lower. The Nasdaq, remember, last week had made a string of record closes at record highs, but we didn't get any kind of upside in equities
and
today.
And it was today the Nasdaq was the big loser of the three major indices.
Financials dragging things down. All right, in terms of overnight and what we're looking ahead to tomorrow, we have a ton of interviews planned for you out of the World Economic Forum in Davos, starting with HSBC's CEO Stuart Gulliver. That's tonight at 6 p.m. Eastern. Tomorrow we'll follow that up with Jamie Dimon, Ray Dalio, and Stephen Schwartzman.
Should be some great stuff. I'll be looking at U.S. CPI and industrial production tomorrow. I imagine folks are going to be paying close attention to that CPI number for any hints of inflation. Then later in the day, Janet Yellen speaking on the economy at 3 p.m. Eastern. You won't want to miss that. We'll have live coverage of it when it happens.
And don't miss this. Earnings from Goldman and Citigroup before the bell and after the close. Joe and I will be breaking down Netflix's results. That's all for What You Missed. Thanks for watching.
Have a great evening. This is Bloomberg.
I'm Heidi Lun, you're watching Bloomberg Technology. Let's get you started with a check of your first word headlines. On his last days in office, President Obama has pardoned 64 people and commuted the sentences of more than 200 inmates, including Chelsea Manning. She's the Army analyst convicted of the 2010 leak that revealed U.S. military and diplomatic activities across the world and put WikiLeaks on the map. Manning has been jailed for nearly 7 years, where she became a transgender female in a male prison. We're repealing the Affordable Care Act without a replacement would increase America's uninsured by 32 million people and double premiums by 2026. That's according to a Congressional Budget Office report citing numbers from a vetoed 2015 bill that would have vetoed most of Obamacare. The man suspected of killing 5 people and wounding 6 others at Florida's Fort Lauderdale airport returned to federal court today. The hearing was over whether 26-year-old Esteban Santiago could be released on bail. He could get the death penalty if convicted. And security arrangements for the inauguration are underway. That's according to the White House, which says the president directed his national security teams to maintain a high state of vigilance. We'll bring you live coverage of the inauguration at 10 a.m. Eastern.
I'm Caroline Hyde. This is Bloomberg Technology. Coming up, the chip maker in the crosshairs. We'll break down the FTC's case against Qualcomm as their fight over licensing heads to the court. Plus, will Snap open up? We'll put the company's culture of secrecy under the spotlight as it prepares to go public. And Samsung's tangled web, the succession plan at South Korea's most successful company, is in total disarray as criminal charges advance on J.Y. Lee. But first, to our lead, and a Bloomberg scoop at that. US regulators have filed a lawsuit against Qualcomm for allegedly using unfair practices to license its technology. Digging into the details, the Federal Trade Commission says Qualcomm forced Apple to exclusively use its baseband processors in return to lowering the rate of patent royalties it charged. The world's biggest maker of smartphone semiconductors disclosed back in 2014 that its licensing methods were under investigation by the FTC and a major fine was possible. Now, Qualcomm makes the bulk of its profits from technology licensing, and investor reaction was swift on the news. Check this out. Shares tumbling by 5.6% at one point in this session, down 4%. That's $4 billion wiped off its market capitalization. Pleased to say we're now joined by Bloomberg editor-at-large Corey Johnson and Bloomberg Technology's Ian King, who broke this story. And the new piece of information, Ian, is the Apple claims, it seems to be here, and the fact that this is perhaps stifling competition.
Yeah, that's the bombshell for today. I mean, we've had very general accusations against them, you know, obscure kind of legalistic accusations, but this is like specifically saying, no, Qualcomm, you used your position to basically force Apple to